now we're going to talk about a very hot topic all over the world about joining the blockchain revolution, and it's quite consistent with the fintech discussion we've already had so far. So it will be really interesting to hear about this perspective. So the moderator is going to be Yudhanjaya, who's a big data researcher at LIRNEasia. And then we also have joining him Tharindu, who's a VP of software development at MillenniumIT. And finally, we have Jayamin, who's the founder and CEO of MoneyWorkz Technologies. Thank you. I'd love to have them on stage.
So before we start, how knowledgeable are you on the subject of cryptocurrency and Bitcoin and blockchain? Can I see a raise of hands of those who know what Bitcoin is? Just to get a feeling for the audience. Okay. Can I get a raise of hands for those who know what the blockchain is? Okay. Can I get a raise of hands for those who know what protocols, tokens? Okay. Right. So in that case, shall we start with that general introduction to? Okay. So we are going to start with here's how this panel is going to be structured. We're going to start with a very general introduction to this topic, so that there is some common background to all of us. And then we are going to explore the potential of the currency. We are also going to explore the potential of the blockchain itself. And then last week we are going to have a look at what investments are happening, what potential is there in that space. And then after that we are going to have a Q&A where you can pepper us with questions and we'll try not to look like idiots. So for starters, any conversation involving cryptocurrency has to look at three basic components, I'll put it that way. The first is the blockchain. Now the blockchain is the foundation on which all of this is built. The blockchain is a distributed ledger of sort. Think of it as a database that is spread across a large variety of computers that basically acts as a store of repository of data. And it uses peer-to-peer connections to keep itself updated and so on. Now on top of this you have something called the protocol. The protocol is essentially a set of rules for how this database connects, how we call them nodes, how these nodes connect to one another, a series of rules that allow you to build something on top of that is the token, what we call the currency. Bitcoin itself, in Bitcoin lingo, is called a token. That is the tradable asset that is built on top of these technologies. So the underlying technology at the end of the day is the blockchain. So that's where we're going to start. So I'd like to invite Tharindu to sort of give you an introduction to this space, what the blockchain is, the technicalities behind it, how it can be used, and so on and so forth.
Okay. So for the benefit of people who are not really familiar with blockchain, think of it essentially as just a bunch of records as in a database. The difference would be that we are not storing all the data in one place and someone controls it. We get together, agree on a certain set of rules as to how are we going to talk to each other, how are we going to add things to the database, and so on. And then each one of us keeps a copy of the entire database and we go by the rules, right? And we get together and agree on, or we come to a consensus on how the database needs to be updated, okay? What's valid, what's not, and so on. So if someone decides to break the rules and do whatever he wants, the others are going to say, hey, you are not doing the right thing, you are not playing by the rules, so we are not going to consider whatever your changes to the database. We are going to agree that this is the correct picture. So the basic idea is just that. Okay? Now you can, technically in order to get to that, you have to be able to have you need to essentially tackle lots of technical problems in the sense of, okay, how do we agree on certain things without trusting each other, and how do we figure out what is the truth, what is not true, and so on. So that's where the protocols and all of that would come in. And
So just to butt in here, if someone is, for non-technical people, it helps to think of this as a group of people. We call people who hold records of the database, we call them nodes. Imagine a group of people, and imagine that we are making transactions and we mutually agree, we talk to each other and we agree, okay, this thing is valid. Therefore, we shall all maintain a copy of it. So by default, if someone, as you're saying, if someone's trying to break the rules, if someone changes one of the transactions on his end, everyone else would basically say, no, that's fake, that's not what we agreed to, because the rest of us also have this record and it's contradicting what you say. So it's a very good way of figuring out it's a very good way of maintaining a database that doesn't really get tampered with.
so what we are seeing right now, or what you are going to be familiar, or the most widely distributed thing that's out there is essentially cryptocurrency. Being able to have a digital form of currency, do transactions based on that, and not have a middleman. Essentially no banks, no governments, nothing, but the underlying technology can be leveraged to do much more. It doesn't have to be just a cryptocurrency or digital currency based platform. You can...
So what could this underlying platform be used for?
Yeah, so essentially...
And also chime in if you feel like pitching in. What this, we know Bitcoin is one thing, we know Ethereum is there, but what else can we use this for?
Yeah, so we've, like I said, essentially it's a distributed database. So anything that you can represent in a digital form, you can store on it. So we've seen, apart from the currency systems, we've seen land registry or title deeds being digitized and stored on a blockchain, so that you don't have to trust the government or the land registry or the people that work there. Once it's in the blockchain, no one can change it or transfer that land or deed to someone else without you knowing it. We've seen this being used for things like tracking the origin of diamonds on a system called Everledger. We've seen it being used to track the origins of the supply chain on system like Provenance, where you can actually when you're buying a product, you don't have to trust the label that says, okay, this came from ethically farmed tuna, or this wine was made from grapes from someplace in France.
So verification of identity,
yeah,
basically.
So you can essentially take that and look it up on a corresponding blockchain and actually see the farmer certifying that this is his certification that he farmed it this way, and so on. You can track the whole thing. So there's so many practical applications that we are seeing.
Any other examples that we can pull from, especially from finance?
I think the fundamental principle is that anything of value or an asset or good that has an economic value or purpose can be transacted on the blockchain, whether it be a currency, whether it be a good, whether it be a service, or whether it be an asset. So for things like assets, there may be land registries, there may be real estate, there may be securities or share trading certificates, etc. In terms of goods, it can be, as Tharindu said, organic supply of agriculture. If it is pieces of information, it can be the information blocks of people who are participating in a transaction, which can be stored in the blockchain and manipulated with. So the base of application for the blockchain evolved. Initially, the protocol was developed for the blockchain from Bitcoin. From Bitcoin.
Satoshi Nakamoto's paper.
Exactly.
Yeah.
And that paper solved certain other issues previous attempts at cryptocurrencies could not solve.
Like what happened?
For example, in mathematical hashing and comprehensiveness, there's a principle called the Turing completeness, right? So that complexity was not achieved in previous attempts at cryptocurrency. So that is a measure or standard which we use for the comprehensiveness of the a mathematical exercise and a hashing and sealing of a record.
Again, for the more non-technical people, There's a guy called Satoshi Nakamoto. We don't know who he is. He's not been found yet. People theorize that he's a rice farm in Australia, some team from Japan, nobody knows who he is. But they released a paper in which they describe this cryptocurrency, and that is how Bitcoin really started, and that's how all this conversation came about. So yeah.
Yeah. So basically, when Satoshi Nakamoto put out the particular paper, and once people adopted it, certain other issues like that of Turing completeness, which was not done before, was achieved. So then it was taken up as a platform which can be applied to things other than the Bitcoin, because it essentially solves one major issue in the internet, that is trust and authentication.
Right.
Internet was the network of information. Blockchain is referred to as the network of trust. That is, on top of information, you are able to add authentication without referring to offline methods of authentication and validation. Do it together, and hence it is Internet 1.0 plus the element of trust is the blockchain.
And you have a highly, how do I put this, a highly survivable method of verifying identity, right? Because when you're saying identity, I remembered there's a project called BitNation, where just after the Syrian war, when 4 million refugees washed up on Europe's shores, they didn't really have a way of tracking identity for these people. So they started encoding their names on the blockchain with identity. So since the blockchain is globally distributed, and since, as Tharindu explained, this database is globally synced at all times, what you got was a system of identity that transcended government. No single government can come and say, I'm taking your ID away, because now that is recorded across the world. So verification of ID. So this fundamental, the blockchain's power seems to be, in terms of utility, it seems to be huge. But what's gaining attention is the cryptocurrency angle, because that's what people are jumping. So why is it so important? Why is cryptocurrency such a big thing? Because the blockchain, you know, on paper it sounds like a distributed database, which is as exciting as explaining Hadoop. You know, it's wonderful, but you know, when you listen to the explanation, most people just go for dessert. Why is cryptocurrency such a big thing? Why is it important to us?
Yeah, I think blockchain may be a sexier name for batch processing in a distributed manner.
Pretty much.
Right? So why did such a boring thing get so sexy in the internet world? Is because of the application in mass scale. When we did a project with the NASDAQ, the savings the NASDAQ can achieve by applying the principles of the blockchain to a market which they were not able to crack. That is the trading of secondary securities. Let's say when Snapchat is still private, is it? It's still a private company. Let's say it's a share of you hold as an investor shares of a private company, and you don't.
Snapchat is Facebook's VP of research right now. Everyone working there they're VPs of product development probably for Facebook. But yeah.
Yeah. So let's say you are an investor and you hold a private share instrument, but it is not traded on the public domain. But you need a way of realizing value for this security. So the NASDAQ was able to say, let's create a second marketplace for private securities and use the blockchain to remove all the inefficiencies, issues with regard to multiple people claiming different classes of shares in the same company, keeping track of the dilution of shares, keeping track of the value of the shares right throughout that. So NASDAQ was able to apply those principles using the blockchain and save a lot of cost in terms of billions of dollars. And there's talk that by 2020, roughly about $1.5 trillion worth of exchange traded funds will come on board to be traded on the blockchain. So what is the benefit? If it was traded on the blockchain, the clearance, settlement is instantaneous. The transfer of title is instantaneous. But if it was the traditional system, there was T plus something in terms of settlement.
And there is also a history of transactions made, right? Maintained from day one, from this initialization. You don't really need to be carrying around paper anymore. You don't have to worry about lost records.
I think what cracked it, that's a good point, Yudhanjaya. So what we call the matrix structure of tracking. For example, in the traditional system of currency, the central bank or anybody who keeps record of your money can tell that you have 1,000 rupees in your bank, but nobody can tell what are the serial numbers of the currencies which you deposited and own at the moment. But in the blockchain, the serial numbers of the bitcoins which you own can be tracked, and for specific bitcoin or specific asset, if you're applying the blockchain broader than bitcoin, you can track the entire history of that. So you can track per asset, you can track the entire history, and for a particular account or a user or a person, you can actually track all of the serial numbers out there. So it actually, central banks went from a point of actually resisting Bitcoin to actually being okay with it once they realize it is also a tool for them to be more.
Yeah, they can
having
track,
more
they can
information.
track that. And this is ironic because Bitcoin is commonly pitched as a anonymous currency, you know, where something you can use to purchase LSD off drug markets. That's basically what then the first initial transactions are used for. So you're saying it is actually a lot more traceable, and the things built on blockchain are more traceable.
Yeah,
that way.
it's traceable in the sense that, okay, so the accounts are anonymous. So there are accounts, but there's no person attached to that account as long as you have the private key
So
of that
the
account.
real life identity is dissociated
Yeah,
from your identity
so
on blockchain.
the way Bitcoin works, for example, you don't track balances on the accounts, you essentially track transactions. So if I want to pay you 5 Bitcoins, I can't say I have 5 Bitcoins in my account, give it to you. I have to say, hey, look, there's this transaction where someone transferred 10 Bitcoins to me, take that as the input, and I want 5 Bitcoin, from that 10 Bitcoins, I want 5 Bitcoins to go to your account, 5 Bitcoins come back to my
so
account.
It's a history of transactions rather than an actual asset being bounced back and forth.
So that's how Bitcoin works.
Yes.
So that way you can actually track the history of the transaction. So where it gets tricky is that when you want to cash out, right? Now when you want to turn your Bitcoins into dollars, you go to a Bitcoin exchange, you sell your Bitcoins, get your dollars, transfer it to your bank account, that has a real identity attached to it.
Right.
So that actually exposes you.
Right.
However, there are ways in Bitcoins, there's Bitcoin, people who are familiar with Bitcoin knows there's something called Bitcoin tumblers where a lot of people put all their Bitcoins into one wallet and then takes it out in smaller amounts. So you can still track it, but since everybody's hitting in one place and then taking stuff out, it's all mixed up. So
what I find fascinating is that the whole thing of cryptocurrencies is there's an entire alternate currency that is global that cannot be taxed, that transcends governments, built up purely around perception of values.
yeah.
Which interestingly is also how the dollar since the
all currencies work that way.
since fiat currency was introduced, that's basically how all currency works.
Yeah.
But it's just that anyone on the earth can basically figure out how to create their own currency, and if I can convince you that Yuda coin is worth 400 rupees a coin, and I generate 1 million Yuda coin, then there's value there.
Yeah,
If
so-
I can get other people to believe in it.
Yes, that's the whole point, right? So if you take the Bitcoin network itself on the Genesis block, which is the first block that of the entire chain, that says Satoshi Nakamoto owns 1 million Bitcoins.
So how much is a Bitcoin worth now?
In the morning I checked, it was $2,300, $2,300 something.
And we need to find this Satoshi guy. But going back to the blockchain now, you gave a lot of examples where the blockchain can be used for verification of identity, from diamonds to organic produce.
Yeah.
For a company, what does it entail to set up a blockchain network? To use a blockchain, what's involved in actually using one of these things?
So there are, as you said, there are software and protocols for running blockchains. There are proprietary ones like Chain and various other companies have their proprietary ones, and there's open source ones, the Bitcoin, Ethereum, Hyperledgers, and so on. So you can go down in 2 ways. You can, if you're taking the open source stuff, you can either operate your application on a publicly available blockchain, which is the cheaper version of it, or you can build your own blockchain if you have like $20 billion to spare. Because to have a proper blockchain, you have at least maybe 1,000 mining nodes, and that's going to cost you.
So you need to have the many nodes being computers running this?
It depends on the application. If it's like a enterprise-wide thing where 10 banks are going to get together, they know that they are going to transact with each other, then you don't need a network that has 100 or thousands
And banks are actually doing this right now, right? They're building blockchains where they...
Absolutely. So there's a huge project going on called Hyperledger that is made out of a lot of big banks, tech companies, and so on. There was another competing organization called R3, which actually now sort of merged. So the R3 was building something called Coda, which is now contributed into Hyperledger. That's a slightly different type of a blockchain targeting enterprise scenarios where you are not necessarily dealing with anonymous users. You know your users, so you need to be able to sort of authenticate them, not expose the entire data set to everybody, be able to do data segregation and so on. So there's a lot of work that has happened on it. Version 1 of Hyperledger came out recently, and IBM just published or made their HSBN system, which is the High Security Business Network system, generally available, which is essentially a blockchain or enterprise level secure blockchain as a service kind of thing. You can go on it, purchase an account, you don't need to set up miners, do anything, all the software is there, you just start building your application on top of that.
So I believe Jayamin you had a series of slides which actually went into the applications and spoke about the industry. Could we show these guys that? Could we talk about this a bit?
Sure.
So Jayamin, since he's heavily interested in, he works in the investment sphere, and part of his work is actually tracking what can be done with these technologies and figuring out what investment opportunities there are.
Yeah, essentially what we try to put together here is some areas of innovation and application around the blockchain. Since I come from a finance background and a fintech investment background, it's a little biased towards fintech, so pardon me on that. So essentially, as we were discussing previously, alluding to before in the discussion, there were previous attempts at cryptocurrencies. Essentially, probably the Bitcoin attempt is the 100th attempt at a cryptocurrency, but there's something which the blockchain technology, which is the technology behind Bitcoin, cracked. And hence, it was ready for mass adoption than the previous versions of cryptocurrency. So what we think are those three major tipping points in terms of the blockchain. What it solved are these three things. One is a matrix or multi-dimensional tracing, which we were talking about before. So if there's 1,000 rupees in your wallet, you have no clue who owned the serial number of that particular node before you. But in terms of the Bitcoin, it has an entire history of that particular currency, and it gives your previous owner, and the sealing of the block, which records the current transaction, picks up from the previous public key in terms of the encryption and hashing. Then what blockchain had is a self-sustaining incentive system. So it is so what is Bitcoin actually? It is a reward created for people who do the administrative work in the network. So that is the function of mining. So mining is essentially running those mathematically complex algorithms and sealing off those blocks, and that is called mining. And as a reward of successfully sealing off those blocks as a holder of a node, you get a reward.
Bitcoin. Yeah.
You get a reward, which is a Bitcoin, right? So there's
an entirely virtual asset. It doesn't really exist other than a transaction log.
And this is why it can be applied to many other aspects as well. Because instead of Bitcoin, if you know the blockchain, you can actually substitute Bitcoin with whatever other incentive system. Right? So that is the second thing. And the third thing is the hashing logic, which we incorporate, can be separated from the base infrastructure. So that means you can apply the blockchain to many other applications inside your business or in terms of a broad network. What we actually saw was a lot of proliferation in the front end. So let's say there are 3 layers in terms of an investor, I will look at the space in like 3 layers. First is the infrastructure and the base protocol. And secondly, there's the middleware and the APIs. And thirdly, there's the applications and the solutions. So essentially, what we saw then was there's a lot of investment going into, as you can see, 58% of the investment. So these numbers are venture capital investment numbers in 2016 into the blockchain-related space. Most of the investment was going into the application and solutions, which solve mostly the UX and UI issues around the consumer experience. And by that time, the infrastructure was already invested in and available. So we saw a gap in the middleware and the API space. That is where we got engaged in terms of investing and
when you
putting
say
money.
middleware and APIs, what kind of middleware and APIs? What exactly do these open up?
Yeah. So let's take the consortium of banks. There were about 12 or 14 banks in the US came together to deploy the blockchain. Still, in terms of executing their transaction processing, they could not seamlessly connect to the base infrastructure protocol, either through the Ethereum or the Bitcoin protocol. So they needed a way to actually commit. So when the top area, the application solutions are growing, you need standardized ways of connecting. So basically what we invested was in financial services API development. For example, the bank network connecting, one bank connecting to the bank network of blockchains. So what about Sri Lanka? So are there opportunities to deploy the blockchain in the financial space in Sri Lanka? One myth I think we still have is that we think because of central bank regulation and monetary authority regulations, there are serious obstacles in deploying the blockchain in Sri Lanka. However, what we see in terms of when we ran a heat map as to what areas may be prime for blockchain deployment in Sri Lanka are the areas which are highlighted in yellow.
So we have financial data, trade finance, exchanges, payments, trading platforms, microtransactions, capital markets, banks, and investment, yeah?
Yes. So all of these areas, one actually is classified R. So the R-rated thing is there is a lot of regulation approval required in the payment side of things. So maybe if you are just introducing yourself to the blockchain, that may be an area which is off limits to you. However, and there's a lot of regulation, but all other areas are pretty much available for innovation and disruption, even in Sri Lanka. So this is a heat map which we ran for Sri Lanka. And can you tell me what those numbers are? And people think Sri Lanka is a small market, right? Can you tell me what that 4 trillion rupee number is? It is the total amount of deposits in the Sri Lankan economy. 3 trillion out of that in the banks, 1 trillion out of that in the finance companies. 4 trillion deposits, that's 12 zeros, right? Yeah. So 4 trillion rupees of deposits. So it's not a small market if you look at the fintech space in terms of disruption or any better business model which we can come through the blockchain. And 1.2 times per annum is that every deposit changes 1.2 times every year. That is, the average duration of a deposit in Sri Lanka is 10 months. Right? So at least once a year, that changes. And the deposit base is growing 12% per annum. So that 4 trillion base number is also growing at 12%. So new deposits of net 12% is getting added to the economy. So basically, it's a huge potential in the financial space. In terms of banks, probably it's more suited for private blockchains. In terms of other innovations, there can be open innovation, which we can think about ideas.
So I can easily picture a bank using using a blockchain to maintain records of all transactions that happened and where the money went and so on and so forth. And every single branch would have equal access, and it would be equally fast regardless of whether you're in the head office or some place in Jaffna. And you would have that level of access. That tech is already available, right?
Yeah. So let's take a case study. I think certain banks have got central bank approval in Sri Lanka for the usage of the digital signature for identity check and onboarding clients. So that element combined with the blockchain, so there are banks with branches more than 100. So basically, we can combine the blockchain, which can create a lot of transaction efficiency among those 100 branches within a bank, and then combine it with something like digital KYC, then you can have immediate onboarding of clients and immediate availability of that client's funds right throughout all the branches.
Right.
So that may be a case study in the fintech area. So this is just a summary of the payments landscape globally. Even what we have here, Visa and MasterCards are actually not serious innovations because they, in terms of coming up with a new network, they actually built on top of, PayPal and Stripe built on top of the Visa and MasterCard network already, which was available connecting the world banks. So, however, the bottom line of this slide, the message is that real innovation disrupting Visa and MasterCard's 2.5 to 3.5% fee pool can come through the application of the blockchain. It can be 1/100th of that fee in terms of application of the blockchain. So you can see the amount of savings the economy can achieve, amount of savings the banks can achieve, and the amount of efficiency that can be generated. So essentially now blockchain, as we were discussing, it's moving. Initially there was a lot of penetration of applications in the financial services space, but now it's moving beyond the fintech space and getting into other areas where there's either an asset or good or service to be transacted, where the identity has to be authenticated, and there's value for authenticating the identity of the good which you are trading on, whether it be diamonds.
Or plain information storage where you need, I keep thinking government records. Now since we have the whole RTI movement coming in, I keep thinking government records distributed across an entire nation's worth of computers, easily accessible by the public, easily verifiable. That would actually be a huge step forward in terms of how we do things. So I see you have the government and legal spaces here. In terms of IoT applications, in terms of the health and science and art space, what are you seeing so far?
Health and science, it's essentially about getting the entire patient records on board to the blockchain.
Right. So anyone, any app can easily access this patient's medical history, so on and so forth. Potential for abuse, perhaps?
Yes, in any network, there's always potential for abuse. The main threat of any network, the potential abuse comes from the players in the platform. So for example, there can be authentication keys available with individuals. To avoid one person misusing it, obviously there may be multiple levels of security built into that, like multiple keys. But when we look at global networks and systems, most of it comes from the players. The threat to such systems comes from the players inside.
I see. So, Tharindu, do you have anything to add in terms of, especially in terms of the fintech sphere, or in terms of agriculture? Is there anything that you can expand on this?
So I think we pretty much talked about lots of applications. I'm sure there's enough minds in here and around this hotel today that can certainly think of a lot more application areas where this can benefit. Yeah. So it's essentially what you have to approach it is in terms of you have a technology that can give you a certain set of properties that your traditional technologies might not give you. So it's essentially how do I take it and map it to my business problem. Out there in fintech world as well, which I'm more familiar with, we've seen a lot of proof of concept systems coming out, but very few POCs coming out which are which is a use case where blockchain is giving you a significant advantage over traditional technologies. Some of the POCs that I've seen is, you can stick a traditional RDBMS and you'll still have the same kind of solution, right? So it's really about how do we take this technology and apply it into the correct use case and solve real problems.
Right. Jayamin?
Yeah, just to conclude on that, I would like to leave you guys with the question, how can we deploy the blockchain if I'm trying with a new idea as an entrepreneur, or if you're working for an enterprise, how can you adopt the blockchain? Or if you're an entrepreneur looking at a completely new business model of reinventing, how can I deploy the blockchain? So in these boxes, what we have actually put in are some actual applications of the blockchain. And the two axes is the size of the impact, and that is the size of the market which you're looking at. And the x-axis is the number of nodes in the ecosystem. Because more nodes which you have to connect to, more complex the integrations and the more longer the process will be in terms of getting all of the ecosystem on board of the blockchain. So we think in terms of box A and B, box A is suited for innovation and external disruption. That is, the number of nodes which you have to change and connect to in the ecosystem is not that high, it is low, but the impact you can make is high. So such examples include brokerages, investment management, monetizing financial data, etc. And the other one, box B, is where the number of nodes in the ecosystem are very high, a lot of changes to be done, a lot of people in the ecosystem, and the size of market is also quite high. So that includes things like the initiatives which we are taking in Sri Lanka, like the digital identity and digitalization of asset registries, etc. And in terms of the C box, that is, the number of players may be very restricted, and the number of the size of the impact is not that great. So typically these are like in-bank systems or changes which you can do. An example may be the example which we discussed earlier in terms of the bank executing a private blockchain for themselves.
So you might as well set up a Postgres database and do the thing yourself.
Yeah, so one message which I want to leave the audience, Yudhanjaya, is that it was earlier very expensive to set up a connection to the blockchain infrastructure, because almost you had to recreate a protocol and create your own access. But now, if you are in Sri Lanka, you can set up a business model on the blockchain because you can access the base protocol, you have access to the APIs, you just need to write the rules which you want into the blockchain. And it can be executed something like a SaaS model. So there's no initial high investment required to connect to the blockchain.
Yeah. Right, so folks, it's generally quite difficult to describe the subject of cryptocurrency without sending people to sleep. I'm surprised we've actually made it this far. So as of now, we'll start taking questions. Anything that you want to clarify, anything that we can help out with?
Okay, this is a bit of a technical question in regards to both Bitcoin and Ethereum. Considering that the transaction volumes in these cryptocurrencies are going up, the transaction times are also going up to perform a transaction. So both of these systems are trying to implement things like the Raiden network and the Lightning network to speed up this process. So with regards to Bitcoin that is trying to implement segregated witness, 95% of the miners need to accept this protocol, need to accept this change to be implemented. What do you see as the future of Bitcoin if something like that is not implemented?
Hard fork.
Yeah.
There'll be a hard fork.
There will be a hard fork.
Yeah, yeah. And Bitcoin will, I think, it almost reached the point of, it almost reached a stable state where it was a finite currency, but the developers keep trying to extend this and keep this going and so on and so forth. I think it will reach a stage where it splinters and then politics like ghash.io sets in. If ghash.io's miners decide that they're going to accept this, then that's 50% of the blockchain. And if the others say no, then that's going to be hard fork and the currency is going to start stumbling down.
Splitting. Okay.
Yeah.
And another question is with Ethereum and proof of stake. Considering that now when you implement proof of stake, it will be the amount of ether that you own that is being staked to verify the transactions. Since lots of people got onto Ethereum at early stages where it was around 10 cents and have hoarded hundreds of thousands of ether, doesn't that then become more of a centralized system as opposed to a decentralized system with miners mining using GPUs at home and mining the transactions as opposed to the staking that is happening using the ETH itself?
It's an interesting thing. I think the interesting bit there is for me is how do we switch the network from a proof of work to proof of stake, and at what point do we do that? So there's as you know, Ethereum just started the Enterprise Ethereum Alliance work, so that's a likely candidate where proof of stake might get first implemented, but if it does, then it's also likely to be maybe a different network rather than Ethereum. So I think it's a valid point. I don't really have an answer there, but it'll be an interesting thing to watch. In my thinking is that maybe it'll actually move to a model where you are not doing an overnight cutover of proof by work to stake, but maybe we have a hybrid model for a while, so that people who have a lot of ether as well as people who can contribute computing power can both exist.
They say that they want to, they will be doing a hybrid model, and at some point they'll be switching to complete proof of stake by, they've implemented a difficulty time bomb so that proof of work will become obsolete.
Right, and they'll just force proof of work out.
Yeah, so it'll be interesting to see when that would, I mean, Ethereum has gone through maybe 3 generations of making the protocols change, and also through a hard fork.
Going back to the root of your question, that the whole fact that people starting on in the network mine a whole bunch of coin, and then they end up with a huge amount of basically assets worth a whole amount of money on their hands, and that kind of creates a monopoly. I think everything tends towards that way.
I'm not talking about the mining aspect of it. I'm talking about the investors who bought in at really cheap amounts.
Yes, so that is actually everything. Even if you look at classical currencies, if you look at the investing world, that trends towards that system where you get a huge payoff for having the foresight to invest early on when things are cheap.
My point was that it'll become a centralized system because the people who have the ether are the people who are staking the ether to verify the transactions.
You might, it might actually be counterproductive for them to keep doing that. Like, for example, when I don't remember the miner which mined 6 consecutive blocks on the Ethereum network. That miner had so much computing power that he actually ended up mining 6 blocks in a row,
network, right?
And he actually backed off for a while, because otherwise then people are going to lose faith in the currency, and you have currency devaluation as well, right? Okay. So if there's one guy making all the decisions all the time, people are going to say, hey, this is crap, I don't want to be with it. Because the moment
people start, it is still a faith-based system.
Yeah.
At the moment people start believing that this is not worth it, that this is rigged, they start backing away, everything falls apart.
Fair enough. All right, thank you.
And it's not only the stability of the technology or the overall supply which determines the value of Bitcoin, right? So there are many other factors that determines the value of Bitcoin as opposed to the exchange rate with the dollar, for example, right? So this is only one particular factor. Yes, the technicals behind, for if it was, let's say, a gold-backed currency system, there had to be gold for the currency's value to be maintained.
Yeah.
But
and the
here,
US dollar was backed by the Federal Reserve,
yes.
And I think Bitcoin right now is propped up quite a lot by China.
Yeah, so there is a worry that 51% problem, right? That China may own more than 50% of the networks, hence they will be able to manipulate the supply of Bitcoins. But what is good about the Bitcoin methodology, there is a hard stop in terms of the number currently. Was it 14 million or 21 million currencies?
I can't remember the exact figure.
Yeah, there's an exact number. There's a limited number of currencies. Hence the fact that and the rate of mining is slowing down. So the fact that there will be a limited number, that governments can't print money if there's a lack of paper money in the, governments can print money if there's a lack of paper money in the system. But Bitcoin, there will be a hard stop at a particular number of currencies. And in addition to that, the usage, penetration of the usage of the currency due to convenience factor, etc., is rising. So overall, if you're asking me if I'm going long or short on the currency, I'll probably go long on the currency. That is, I will continue to believe that Bitcoin will continue to go up in the longer term. But there may be volatilities when these concerns come up in the market. But overall, I think the direction is that it is going, with penetration of the currency, it's going to be positive.
So quite a few of the developers who were initially part of the Bitcoin movement are actually using funds they're burning Bitcoin so that they can bootstrap altcoins. Dogecoin is surprisingly popular for some reason.
Yeah, I've seen that. It's
Yeah,
a joke.
I don't understand why, but there's actual value to Dogecoin, right? Because
Yeah.
they burned enough Bitcoin that they can say, okay, one Dogecoin is worth this much, and therefore thou shalt pay us this much money for one Doge, which is a weird sentence. So any other questions? Anything? This is a bit of a murky and complex topic, but if you have questions, it doesn't matter on what level they are, we'll try and take them. Nothing? All good? So either we did a really good job of explaining, or we did a really bad job of explaining it. Okay, I'm going to go with the latter. Right, so any closing remarks, Jayamin, Tharindu?
No, so if you guys after this want to catch any one of us, chat more about blockchain, feel free. We'll hang around for a couple of hours.
Yeah, we'll be around. So thank you all for listening, and we'll take a leave. Thanks.
Thanks, guys.